Now, how about the trends that will go in the completely opposite direction? Well, it's called as the reversal pattern, and it happens when a pattern is signaling the opposite trend and price is about to come after the pattern breaks. So it is a reversal of the previous trend. Now again, traders can use this knowledge and apply this to the current market to take their positions. So one of the most popular reversal patterns is what is called as the head and shoulders, and it actually consists of three main pushes, which are the first one, and then the second one, which is the biggest one, and the third one that should mimic the first one over here. Now, the appearance of this pattern usually suggests that the next trend would be the complete opposite of the previous trend. And during the formation of this pattern, the volume usually declines and slightly increases during the peak before increasing even further when the pattern breaks. So here, for example, we have this chart for the corn futures, and as we can see, the price originally goes up in the trend here before it hits the neckline, which is basically the support for the three bumps that we are about to have over here. Now, for these bumps, we can classify it into two different parts, which are the hits over here and this two shoulders over here. Now, once this pattern is complete, usually the price will break downwards or breaks down from this neckline. And so the price will continue to move downwards. So again, although it's not looking like head and shoulders at the beginning, we can see now that it looks like it's going upwards over here, encountering the first shoulder, encountering the head, encountering the second shoulder before it actually goes down again. And for the trading volume, again, as it increases over here, we have sharp increase in trading volume before it is going to decline, where the market tries to catch a breath again. And then another slight increase over here as we approach the head, another pause again over here before the price pattern finally breaks and it shoots up the trading volume again. Now, is there an upside down version of a head and shoulder pattern? And the answer is yes, there is, and it is called the inverted head and shoulders pattern, which is a 180 rotation of this pattern. So it will actually go all the way from down and encountering the inverted head and shoulders pattern before it goes up again. Another reversal patterns that we will often see and encounter are what we call as the double tops or the double bottoms. And as the name suggests, it consists of two failed attempts to break the resistance for the double tops or two failed attempts to break the support for the double bottoms. Again, we can see here in our left is the Alibaba stock price. And at first it goes up before it encounters the neckline for these two bumps over here. And we can see that these two are the double tops and they fail to breach this support line over here. So now the market might think, if they continue on failing like this, they do not have a good confidence where the price will continue up. So eventually when it finally breaks the neckline over here, it actually goes down. And this is again what we call as the double tops. Now, similarly here in our right side, we have the Goldman Sachs stock chart, and it was first introduced with this downward pattern before encountering the neckline for this two bottoms over here. And they also fail to breach or fall lower than the support line over here. And so the market might perceive it as being more confident or more relief that they couldn't that they couldn't fall lower. And so when the price breaks here, it actually shoots up. And there are also more variations to these double tops or the double bottoms pattern. For example, the triple tops or the triple patterns, they are exactly or almost similarly the same pattern, just with different numbers of failed attempts. So we've talked about a lot of price patterns, a lot of trend lines now. So let's apply our knowledge to an example, or in this case, the gold futures chart. See if we can find which patterns appears on this trading chart. So you can pause it for a while, think about which patterns could appear, and if you're ready, let's go. So here for the left side, we can see that it looks like it's shaping a bear flag pattern. So it is introduced as the previous trend is going all the way down, and then we have this parallel support and resistance over here as the bear flag pattern before the price breaks from this support line and continue to fall down again. Now, for the second half of the chart, we see that the price over here continues to shoot all the way up before encountering this massive ups and downs. So we can also draw this support and this resistance over here, and it looks like it's shaping a bull pennant, right? A bullish pennant. And if we look closer on the recent price over here, we can see that it's trying to break out from this resistance trend line. So we might be thinking, if we have a chance to buy it at this price, we might actually make some money if our expectations are correct, and the price will break out and rise over here. Now, while this is commonly the norm, unfortunately, things can go wrong. Maybe the price won't shoot up as high as we think, or even worse, it could go to the opposite direction. And there are a lot of factors that can cause this. So, of course, we don't want to lose our money, but if we did end up losing, it is encouraged for us to minimize the losses, right? So it is also encouraged to place what is called as a stop loss while trading. So for long buys right here, the stop loss will be triggered as soon as the price reaches a set level of stop loss or below. So for example, if the price eventually falls all the way here, but we've set a stop loss over here, so instead of getting this huge amount of unrealized losses, when it reaches this price, the asset would be sold at this level. So we have this amount of realized loss. Again, this will prevent the price from getting even lower, right? And this is a perfect risk mitigation plan, especially for traders that are trying to use this technical analysis. Now, how do we know how to set these stop losses? And there are many ways where we can set these stop losses, but one of the most popular ones is actually trying to rely on our resistance or our support trend lines. And in this case, because we are trying to set our break here that tries to break this resistance trend line, we can set our stop loss just before this resistance trend line here. Or if we are confident enough, we could probably go even lower, and we could still think like, if this price goes over here, we might have a chance that the price could go higher as well. So again, it also depends on how much are we willing to lose as well. Or we can also use other indicators such as moving averages and other complex indicators as well. Now, one thing that I also want to point out here is that the importance of stop loss is actually delivered well in this trading chart. So we see here that the price trend actually goes upwards. And then if we put a neckline over here, we can see that it actually forms what is called as the head and shoulders or the triple tops before the price finally breaks and shoots down. Now, if we think, for example, if we buy at this point, for example, because we are too late to enter the market here, we might be thinking that, oh, let's go short selling, and because we will be thinking the price will go down even more. But the reality is it's going upwards afterwards here. So in this case, it's very wise if we can place a stop loss for short selling just above the price over here. So that's the opposite of how we set the stop loss for long buys. And in this case, if the market ends up going here, we'll only have a loss of this much instead of this or this bigger loss as well. So if you are interested to learn more about trend lines and price patterns, you can visit these websites for more information. And for beginner traders, it is highly recommended to use paper trading first or simulated trading first to simulate the trading strategies that we have while learning on how to spot these patterns instead of jumping right in with real money. And that's it for me today. I hope that this video can add your knowledge on the basics of technical analysis. And hopefully you can make an even better and well-informed trades in the future. Now, don't forget to click the like button if you like this video and subscribe to the FarmStar channel to stay tuned for our next video. Until then, I wish you the best of luck, happy trading, and goodbye.